Hey guys, this crypto class. In today's video I brought you update on CS.io on how to trade part 2. all right, before we get started, if you are new on this particular channel and you haven't subscribed this crypto class, quickly go ahead and click on this subscription button and make sure you turn on your bell icon to also that YouTube will notify you anytime we post any new video like this. And go ahead and click on this thumb up to help us increase our algorithm. Share to your friends and comment on the comment section. Quickly, let's get started. Now, in our previous video, we talked about the candlesticks, how to read the candlesticks and move over to imbalance and touch a little bit of the order block. But I will quickly recap. Now, in this liquidity and market structure, there are what we call the financials. All right. Now, the financials are the forex, crypto market and stock market. Now, there are people that provide liquidity, which are these hedge funds, bank, wealth, and the institutions, of which I told you guys on our previous video. Now, there are ways to create liquidity, which I already told you guys about the news, which is the fundamental and the orders. All right. Now, there are type of liquidities, which are equal highs, equal lows, buy side liquidity, sell side liquidity, of which I've already narrated this, and I said this is an uptrend. Now, an uptrend also may represent where there is bullish momentum, and downtrend is just like a bearish momentum or retracement. All right. Now, each of these candlesticks stands as an impulse or momentum. All right. Now, we have talked about these candlesticks, and what we are going to be discussing much of today is the order block, the criteria for choosing order block. All right. Now, but before we go into that, the market structure will show you the trends like low high. You can see here this low high, this high high, low high, high high. Then you can see this one, low high, high high, until you can see high low. Then you can see low low, you can see high low, you can see low low, until this retracement or these trends go back. All right. Now, we have continuous downtrend, reverse, and then we move over to time frame. Now we have weekly time frame, daily time frame, monthly time frame, 4 hours, 1 hour, 15 minutes, and 5 minutes, 1 minute, as it may be. Now, I used to call the 1 month and 1 week as the father, while the 1 day is the mother. Then the H1, H2, H4, M15, M5, M1 stands as the children. That H stands for hours. Then the M stands for minutes. Before we go into the criteria, there are breakout structures in the market. I'll just be using our lines to do that before we go into other blocks, because we have to touch this exactly before we talk about the other blocks very well, so that you can know what we are doing as the other block. I told you specifically, if you can understand your market structure, everything about crypto trading is out. All right. I'm going to use 3, and from here to here is breakout structure. Now, each of these places where is stop, each candlestick stop, another candlestick start, is a breakout structure, and right here are breakout structure. Even in the downtrend, you can see right here at the down, here is the breakout structure, and likewise here is the breakout structure too. All right. Now, this will usher us to order block, and what creates these breakout structures are institutions orders. About the order blocks, I said something about the bullish order block and the bearish order block in our previous video, but I'm going to quickly recap before we go into it. Now, the bullish order block is the last down candle. We say that the bullish order block is the last candle down. All right, which is this one. If I want to set my trade right here, you can see is this last one. I will put my order block, and once it touches it, it starts pumping till here. All right. Now, the bearish is the last uptrend candle, or the last up candle, which is this, and after this particular one, you can see that it was going down. All right. Now, we will talk about the criteria for choosing this order block. Now, criteria for choosing this order block: number 1, there must be an imbalance before you choose an order block. And I told you an imbalance is a space between 3 candlesticks of the same like, and here is a 3 candlestick. Before you put it, you can see that here is an order block. Once you put your trade right here or your entry, you can see that you are going to get a definite trade. All right, now the extreme candle is the highest probability order block. The extreme candle is the highest probability order block. Now I'm going to show you what the extreme. Now this is the down part. The down part, you can see here is another block, but the one at the downest part, all right, you can see the last one. This is a confirmed order block. These the main. Other ones are minor order blocks in which you can set up your trade. All right, now momentum after the order block is one of the criteria. It must be the last up and down candle depending on the bullish or bearish candle, and then the volume are what you consider or criteria to spot a valid order block. All right, you can see we have set our order block right here. Okay, now you can see after we set here, you can see that when the market touches here, it starts pumping up. All right, now let's see what happened right here. I want to draw this down to the last place. That means BTC is definitely going to come back to 60 again. That is one order block, but the other blocks are the extreme here. You can see this one right here, and it will definitely come and touch this. One day is going to come down and touch that place before it starts moving again. Right here is another block again. It might not come back to the previous one. I told you not all imbalance will be filled. All right, but imbalance is necessary to be filled for the structure to be solid. Let's go back to 1 hour time frame, and then let's see what is going to happen right here. All right, let's see what is going to happen, because as I'm looking at this trade is going to be coming down very soon. Say we set our order block and put it right here. We are starting up a trade right now. This is an order block from the last uptrend. Now we are expecting the BTC to go down. All right, now look at what will happen right here. Okay, now assuming we entered on time, it's not even late to enter now. All right, as the time I'm doing this video is not late, then we'll refine to 15 minutes or 30 minutes. All right, so that it will not be much. And you can see 15 minutes, and it has come to retest. All right, it has come to retest and start this confirmation entry right here. You can see it has started already, but we do not start this trade on time. All right, so that is why it has already started reading, because let's say we take our entry here, a short. Now we are waiting for confirmation, and it came and touched the confirmation and start going down. You can see it right now. It might probably come to touch this and then start going down again. And let's go back to 1 hour time frame, and you can see right here it is going down and it has touched and start. Let's say we put our short. You can see that by now we are supposed to be on profit. Now let's go ahead and put our short right here. All right, then we are going to take 50% of this, and let's say here. All right, let's say here, and then we put our orders. So here will be our entry. Our entry is going to be 72,728.7. Here is going to be our stop loss. 73,453.6 is going to be our stop loss, and our take profit is going to be 71,626.9. And each of these, the risk to reward ratio, you can see it 1:52. That means if we use 1 USDT for this right now, for this particular trade, all right, or we use 10 USDT, let's say we use 10 USDT for this. Now in 10 USDT we are going to be losing 1 USDT, all right, to get 52. If definitely this trade hold, you can see a lot of profit right here. That is what we call risk to reward ratio. All right, now you can see this, definitely this trade is gonna hold. All right, let me lock it so that everybody get to see it. Lock. Now let me lock this. I'm going to snap it, and then we are going to wait whether this thing is going to touch this particular line right here to take this. All right, so this is a simple trade. Then we are going to go into spot trading, all right, for the next one, and we are going to be talking about the pro trend and the counter trend, the range and other things you need to know in this particular trade. All right, so that we will not rush this trade, because it's what takes a gradual process to go. All right, and do have a great day, and see you in my next video as we start up the spot and the pro trend.